Well, some news out today is soon-to-be President Biden is electing or choosing his well, it was a great day for mortgage rates. Wasn't so great a day for the Dow. But the news that came out today is President-elect Biden. No comments. There's still debate there or whatever, so I don't want to get into politics. But he is kind of putting out the names of who he wants as the Treasury Secretary, and they'd be part of the equation for stimulus and a bunch of other things. And they asked him today, the person that he wants to elect in that position, what he would do with, in regards to the Fed and the stimulus. And he said, whatever we need to do to keep the economy cooking. And that was great news for the bonds. And that's what we needed for today. So let me just give you some highlights for today and where we are, and then we'll go over what rates did for the day. So right now, you could see the headlines there says mortgage rates remain at near recent lows. Okay, so that's the headline. I'll be posting this on all my channels here shortly, but you're going to love this number. Okay, guys, what is this? For the people that come and see me on a daily basis, this is a great number. And we broke over some Fibonacci levels that might really start to help us. Okay, let's break this down for the newbies. What is this number here? Well, great question. This is a number that represents what's happening with the mortgage-backed securities market. And I'm going to show you a quick little video on that right now.
Tony owns a small bank, and Alice wants to buy a home but can't afford to pay for it up front, so she heads over to Tony's bank to get a mortgage. Tony analyzes her financial situation carefully, knowing that if he gives Alice the loan, a very long-term relationship will be established, which revolves around Alice making payments to Tony's bank over a period of many years. This is what we could call a traditional banking relationship, and as can be seen, Tony has all of the reasons in the world to think twice before lending Alice money. Nowadays, we also have Bill, who is a modern-day banker, and Dave, who wants to buy a home and needs a mortgage just like Alice. As far as Dave is concerned, the process is similar, with him heading over to Bill's bank and asking for a loan. Unlike the previous banker, Tony, however, Bill isn't as worried about the relationship with Dave and is willing to ignore many of his problems. Why? Well, unlike Tony, Bill doesn't have as much skin in the game because 1. He gives Dave the loan. 2. He then sells Dave's loan to an investment bank and receives a bunch of money. 3. The investment bank takes Dave's loan as well as several other loans and creates a package called mortgage-backed security, or MBS. And 4. The investment bank then sells the mortgage-backed security to investors and receives a bunch of money. In the end, it's those investors who end up taking on risk and being rewarded if people keep paying their mortgages. The elephant in the room in terms of problems is represented by the moral hazard dimension, as the Great Recession made clear, because Bill's bank and the investment bank simply sell the loans, get paid, and move on. The more loans they sell, the more money they make, and if things go wrong, investors pay the price. As such, who is likely to be more prudent, Tony or Bill?
So hopefully you got a better understanding of what mortgage-backed securities are and what they do. Again, as this price goes up or this number goes up, what do I always say? When the prices go up, green, as you just saw in the other video, rates go down, yields go down, mortgage rates drop. As if this number's red and the prices go down, what happens? Mortgage rates go up. So we love it when this number is green. Today's a pretty substantial day. So let me go over what's happening here, and then I'm going to tell you what happened truly behind the scenes. So we like this number, okay? So what I try to do is figure out where we're going in the future. Well, the good news today is, again, when they came out with the name that might be the new Treasury Secretary, he had nothing but good news to say to stimulate the market, saying that he's going to put no restrictions on any stimulus that's needed to help boost the economy. That's what everybody was waiting to hear. So what happened? You had a nice little bump up. Okay, so it was kind of unseen. I didn't catch it on my part that this was going to happen, and there might be a reversal to this. There's still a lot of votes being counted and things. I'm not going there, but I just want to let you know, behind the scenes, if things get overturned, all bets off. But right now, it was great news for mortgage rates. So what's happening right here? Well, the Federal Reserve has basically stepped in, and they're trying to keep this the trading of mortgage-backed securities in a tight little pattern here. And what does that do? Well, that actually just stabilizes mortgage rates and stabilizes them at this low level that we have. But you're still going to have a little fluctuation up and down. And we're trying on our end, we're trying really hard to help you catch these little adjustments. Okay? So when, again, as the prices go up, rates come down. So we're better off, or you're in a better position if we locked you here than if we locked you here. Okay? That might be a 0.25% difference in rate. That's where I come across different than the average loan officer, because they're just going to take your application and say, okay, we're locking you in. Let's say they locked you in here. And then a couple days later, you're like, you finally watched my video and you're like, Dan, we're now up here. What can you do? Well, I might be able to lock you in at a quarter lower rate or reduce your fees or something. I watch this every day, all day. Okay? And so now let's break down what's going on in the short term, in this tight little range right here. Well, the Federal Reserve's trying to keep things stable and keep basically mortgage-backed security prices right in this range right here. So they buy when they need to, and they buy less when they don't have to stabilize the price. If you can stabilize the price, that means you can stabilize mortgage rates. Okay? So that's what the trend's doing. But we're having these little anomalies of little pops here and here and here. All this has to do with the election. And in today's news was possibly a new Treasury secretary that can play a big role into government stimulus and so forth. But we should be trading in this range right here, and that's where we could possibly come through. So we're going to monitor this really close, and if I see a pullback in this, I'm going to start probably locking in people at this higher level. Again, when we're higher up here in price, we're lower in rate. Okay, another thing we watch is this red line here, this line here, and this line down here, if you can see this. Okay, these are levels, and this line here, apologize about that. These are what we call Fibonacci levels. These are ceilings. This is a long-term ceiling right here. This is a short-term ceiling. This is a long or short-term floor, and this is a long-term floor. So in the long run, mortgage-backed security prices are bouncing along through like this, but in the short term, they're condensed in this little area here. The thing is, we broke above this level today. Well, we broke above it last week with the election. Okay, well, 2 weeks ago with the election. I don't see this being sustained, but you don't know, because between the coronavirus and the flu and other areas of the country shutting down again, we could kind of see, record low rates again. I'm not predicting that right now, but I could be wrong, especially if more and more news comes out about the vaccine. So that's basically what's going on here with the mortgage-backed security. So I hope I explained that to you in a fairly easy way, as well as the mortgage-backed securities video that I showed. And I'm going to leave it at that today. Our rates, we have not really reposted rates for today because we had a run up midday and on. And I'll go over rates with you tomorrow. I'm trying to keep this short and simple. Economic calendar for the day. A lot of retail sales and so forth came in, and they weren't good. But again, the best news that came out today was possibly a new Treasury secretary that's going to be good news for government stimulus. And government stimulus can play a good role into things. But it also can, hamper the future in regards to inflation and so forth. So that's that. Overall, I try to post this video each day, or this clipping each day, what rates have done generically throughout the country. 30-year conforming rates, jumbo, FHA, and VA. This is where they are generically throughout the country on average today. The 1 day and 7 day delta, a delta means change, so rates are 0.001 less than they were yesterday. No change here. 0.003 difference reduced in the FHA, and up 0.01 on VA. And tomorrow I will post what my rates are compared to others in regards to a 3% down purchase market. So if you're looking to buy a house tomorrow, or if you're looking to buy a house, tomorrow I'll have the rates on where they are. If you're a first-time home buyer and you're looking to put 3% down. So to conclude, if you like this video, I hope you do. The best way to get a hold of me is give us a call. We have an 800 number, 844-775-LOAN. That breaks out to loan. There's a quick video of us. It's me walking through the office, giving a little tour and a meeting that we had with my staff. If you're looking to apply now, hit the apply now button. If you're looking to buy a house, click this one. Refinance, click this one. Get a rate quote, this one. This click here is if you want to find out the value of your home. This is the best valuation tool in the market. So what I ask people to do on a daily basis is this. If you're in the mortgage process right now, you're looking to buy a home, build a home, refinance, and you applied somewhere, they're required to give you what's called a loan estimate. Send me that loan estimate. Let me review it and give you a second opinion. Probably 90% of the time, I'm going to get you a lower rate and lower fees. Sometimes I get beat. It's very rare. So to find out how, all I need you to do is send me your loan estimate. If you're not in the mortgage process right now and you're like, Dan, I really want to know if I can, what a refinance would do for me, email me or go online and click the apply now button. But I ask people though, if you just want a scenario, send me your mortgage statement and I'll be able to get to your home address. I can pull up the value of your home, see what your current balance is, see what your rate is, and see how much money we can save you there. So if you'd like to do anything and reach out to me for anything that you might need, the best way to do that is email me. My email is D for Dan, Frio, so dfrio @preferredrate.com. That's it for today. If you like the video, I hope you do. Please give me a thumbs up. Subscribe down below. Hit the bell so every time I do post a video, you get an alert and you can check out and see if it's a video that you want to see. I'd greatly appreciate if you shared my videos. We just peaked over 10,200 subscribers, and the goal is to have 12,000 by the end of the year. So only you guys can help me with that. So God bless. Take care. See you tomorrow, same time, same place. Bye-bye.